Good morning, everyone. Welcome to the Trade Finance Adjustments for Thursday morning, the 8th of August. My name is Kevin Hurley. I'll be hosting this today and talking with you. Give me a quick second. I'm going to go lock an office. All right, here we go. Give me some thoughts. There are 13 of you here. Give me some thoughts on what you think of our market right now. I'm just curious to see what you guys are thinking. Volatile. Good one. What else? What are you thinking about the market? Trade wars. Okay. I'm going to go ahead and put that trade wars with China because it's not everyone. What else? That's an interesting take there, Lance. Oops, sorry. I'm going to go ahead and stick that right here. Better than expected earnings, lowered guidance, even with lowered analysts' expectations. That's insightful, and in all honesty, I would agree. I'd agree 100%. We have better than expected earnings with lower guidance. So I'm going to go ahead and put with lowered guidance, even with lowered analyst expectations. So what you're saying, Lance, if I can paraphrase it, we've had better than expected earnings with poor guidance going forward, even after the analysts have lowered expectations. So we wouldn't, I don't know, so we wouldn't, so we'd have a better chance of looking better, at least on the earnings front. Is that fair to say, Lance? Abraham, up without much conviction. Any event can become a trigger for either trend. Wow, that's also pretty insightful. I'm going to put up recently without much conviction, and any event slash text slash tweet can become the next trigger for market movement. I'll buy that too. That makes perfect sense to me. So, out of curiosity, did anybody put on the Disney trade from whenever? From Tuesday? No? All right. So it wasn't just me. Yeah. Kind of hard to get filled on Disney. I'll be honest with you. I don't know. I don't understand why. I thought Disney went down. So you could have gotten filled pretty easily on a 142.39 September bear put. If we looked at it today, wrong one, sorry. If we looked at it today, where is it? We took some put protection off on Disney. Where's my trade? Put vertical didn't work. Huh. I probably got in here somewhere. I just don't see it. So kind of a good thing not to get filled there. So where am I going to go today? What am I looking at? I'm looking at a couple new opportunities. The first one I'd be looking at, I want to follow the earnings. And CVS is my breakout stock today. So if I look at CVS, earnings came in at 189 versus an estimated 169. Revenues came in at 63.43 versus an estimated 62.66, and that's in billions of dollars. Recently acquired Aetna. Of course, I think I just spelled that wrong. A-E-N-T-A. A-E, Aetna. And basically has been market range bound for the what ifs that may occur 18 months from now after the election. It's ridiculous. Absolutely ridiculous. Not the best chart in the world. So as I was taking a look at the picture, come on. Come on. There we go. Where was it? Just took those screenshots. Slow today. When I take a look at CVS, it's finally breaking out of its 57 to 52 range. But does that look like a great chart? Is that a chart that you'd say, hey, I'm going to go put something on CVS? What do you think? It's kind of a hard one, isn't it? Close to being overbought and no man's land between the 200-day of the red and the 50-day. Support at 57, resistance at 60.32. So we got $2 of downside, $1.32 of upside. On a short-term basis, that's a difficult chart to look at. But I usually always take a double look or twice the look, right? Load up, load up. Come on. What if I use that chart? What if we take a year view and take a look at that chart and say the fundamentals justify upward movement? Boy, really, if it breaks 60 or the 200-day, 65 could be its first stop on the way up. So as I was taking a look around and saying, what could I do? What would work for me? I would feel like I would want a little more time. I might go out to a January expecting I'm going to have the dollar cost average. Oh, I could do a September 6th. I do like a shorter term. $3 spread. A nice $3 spread, shorter term. Understand they're probably going to get stopped at 60 and a bit, right? 60.32-ish. So I do like a shorter term snapshot analysis for those that like to take a quick peek at that. Not a bad trade. What I don't like is the probability for maximum profit. So this is one that you would have to be completely okay with stopping right around 60, 32, and getting that 82-cent credit. If you got an 82-cent credit on $1.47, I guess it's 225 though, huh? Let's take a quick peek again. You're going to capture that 84, 85-cent credit against 225 debit, 144 midpoint. So let's say 145, but you get to keep the 85 cents divided by 145, a 58.6% return. I like it. That makes sense to me. I also like the idea of giving it a little more opportunity. and doing something like 57.50, 65. This one shows just as much intrigue and interest to me on spending $3.11. Much the same percentages for probability for maximum profit. All those stay about the same. But the risk to reward ratio changes from a 1 to 1.3. It gives me more time. I would not do 10 contracts. To be 100% honest with you, I would not do 10 contracts. I would probably do 4, knowing I'm going to dollar cost average one more time. And I do want to be able to dollar cost average one more time. That's what would make the difference for me. It's having the opportunity to dollar cost average this if I need to. But I like it. It just, for some reason, it screams to me. It's a no-brainer. I don't have a good answer on telling you why, to be honest with you. But it does mathematically make sense to me. Another one, little different, but I like where it's going to be at. Marathon Oil, one of the cheap ones that's gotten absolutely no love in the stock market. No love, nobody likes them. I'll put in those numbers for CVS. Marathon Oil is also a post-earnings play. Marathon Oil came in with 0.23 cents versus an estimated 0.17. And $1.43 billion in revenue versus an estimated 1.42 billion. And 190 to 200,000 barrels per day output right now. I love it. Makes sense. If I was one more time going to look at a picture and a chart, I will most likely one more time be disappointed. I'll sit here and I'll go, you've got to be kidding me. Look at Marathon Oil. It's got to get above 13. It's got to get above 15.68. But it's only trading right now at 12.65. So I might get it up to 13. Not a trade I'd look at particularly today, but as I took a look to see a little bit longer term, and I always check fundamentals, I went to FinViz, and it basically tells me, hey, There's a hard cap at 13. It's a hard cap at 13, no questions asked. The hammer looks a little bit better on this one, but a hard cap at 13. Let's update it. Let's see if the hammer still looks as good. Yep. So you can go through all the fundamentals, but the reality is downgraded in June from no one, Atlantic Equities, 22.23, upgrade from Citigroup. Piper Jeffries has it overweight. This is all going back to last year. Upgrade from Wells Fargo, Mizuno. They don't seem to be too bad on it. But the only thing I think would move them above 13 would be some type of oil event, conflict, problem. It's not really going to just move up there because of its earnings. It just doesn't do that. So I am looking at it. I don't know. I don't know where I would play it. I know that's kind of funny. Well, Kevin, you're here to show us that. Yeah, I know. I got it. I know. This one's caught up against the world. The world oil. Abraham, Marathon Oil, you have a fair value at 1911. 1911, is that correct? Yeah, I had it just slightly different than that. I think I just rounded it to 19. So yes, there's the opportunity that's here. But can you fair or fully valued around $19, but the markets have Marathon Oil also at a depressed price? Huge opportunity. But the question is, when do you do it? You know 13's your hard cap. So do you look at a short term? Do you look at Marathon Oil September 19? Where for cheap you could do a 12.13, 60 cents to make 40, a 66.67% return. Do you wait until 13 and prep a trade out to like January 20 and prep a trade at 13? And if I went back to my chart, 200 days at 1565, and do you prep a trade at 1316? 1315. 71 versus 92, you get another 20 for 22 more cents. 21 more cents, you get an extra $1. It's an interesting way to look at it. It's an interesting trade to have at your radar, right? To have on your radar. Me personally, I'd be going out in time. I'm not a short-term day trader kind of person. I'd be going out in time. That's what I'd be looking at, and that's what I'd want to follow. Give me something out in time. The short term doesn't excite me. But there you have it. CVS and Marathon Oil, 2 opportunities for you. Bull calls, if you wanted to do 10 contracts, start off with 4. So you have the ability to dollar cost average a couple times. Any questions I can answer for you today? Any questions I can answer for you guys today? If not, I'm going to tell you, have a great week. The CVS trade really is the one I'm leaning for. Marathon Oil is one to put on your watch list. But the CVS trade, that would be ideal for me. Do I have a buying list for dips? Of course I do. But my buying list for dips is rather extensive. Come on. And it's not loading. Either one is. But yes, I've got a buying list of probably 100. Goes across all 11 sectors. It's kind of my best in breed. But yes, I've got a buying list. I'll be honest with you, the buying list that I've had for a little while now is heavily weighted in the technology sector and heavily weighted in banking. Since a lot of the banking is still not to 2008 levels. But I nibble. I mean, this time I nibbled on Under Armour. That was my nibble. Took my profits, bought more shares. It fell from 28 down to 20 and change. I had 27.50 long puts. So Under Armour was my nibble. I at 2066 and 2073, I cashed in long puts and I added more shares of Under Armour to portfolios. Any other questions you guys have? Good question there, Ida. Guys, have a wonderful weekend. Might see a little bit of profit taking tomorrow. Not a big deal. I still have some positions that are protected, and I will keep them protected just to be safe. It just seems to make sense that way. My decision I'm trying to come up with today is if I'm comfortable taking off long puts on Apple, finally trading at 202. So in that case, I will be taking some profits on long puts on Apple. So we have one other question. Nope. All right, you guys have a wonderful week. I look forward to seeing you here in the near future. Bye-bye.